right. We got a lot to go over today. Let's start with hash rate. Obviously, last year we saw China go ahead and kick out 60+% of the hash rate. Hash rate went down more than 50%. It's come roaring back. You've got this chart here around the 7-day average and also the 30-day growth. What is this showing you, and why do you think this is so important?
Yeah, so started the slide deck off today with just a couple of the fundamentals. So obviously, network security hash rate matters a lot for the Bitcoin network, but it's something that you might not see when you're just looking at the ticker symbol and the price move up and down. So hash rate, we like to look at the 7-day average. Some people do 14-day, 2-week average, a month average, but basically because of like the day-to-day variance of these block times coming in, the moving averages provides a little more signal. So 7-day moving average, networks above 200 exahash. It's honestly quite historic, just given like the breadth of the drawdown in 2021. You kind of in the second pane in the bottom of the chart, we see that 30-day growth. And besides basically that the China event, you see just how the hash rate relentlessly growing. So the fundamentals of Bitcoin have never been stronger. Network security up and to the right, and it's becoming a lot more competitive to mine Bitcoin. Actually, with hash rate rising and the price kind of consolidating, it puts a little bit of compression on some of these miner margins, which is what we've talked about a lot. Some of the publicly traded miners, denominating them in BTC terms. It gets quite interesting if hash rate continues to kind of hockey stick upwards. And I think that'll be the story of the next decade, is just hash rate relentlessly bending upwards. A lot of analysts think that 300 exahash is in the future for 2022. We'll have to see, but a lot of publicly traded miners are pretty optimistic about that. So definitely an encouraging sign in general, though, of network security.
Yeah, it's absolutely incredible to watch just how quickly it came back, how resilient the network's been, and continue to hit those all-time highs. Another area of massive growth recently has been the Lightning Network. And every single time I go and I look at these statistics, I'm personally just shocked. And I'm, as bullish as they come, but the growth seems to be even outpacing my expectations. What are you seeing here with the Lightning Network public channel capacity?
Yeah, so I mean, the Lightning Network is not something that gets talked about a lot in crypto spheres. It's kind of just this thing that's being worked on under the hood, and a lot of these open source protocols, apps, different something like Strike, right, where it's almost abstracted away, where you don't even know you're using Lightning. You're just scanning a QR code. I think that's the future, and what it allows for is this monetary asset to be settled basically instantaneously anywhere in the world. So Jack Mallers is having a talk with the IMF saying this isn't even about Bitcoin, the asset. This is about Bitcoin, the network, and Lightning, the network, which is a layer 2 on top of Bitcoin, just being a superior monetary network compared to anything the world's ever seen. And the reality is that almost no one in the world understands that fact yet, that we can settle without really any counterparty risk. We can settle this absolutely scarce monetary asset in a bearer type way from peer to peer, with no intermediary, with no counterparty, and with no really risk of funds being seized or anything else that you deal with in a traditional kind of third party settlement network, or third party like a Visa, PayPal, etc. Satoshi solved that double spend problem, and Lightning allows for this instantaneous type settlement. So it's really exciting, and a lot of really smart people and engineers and founders are building on top of this thing. So, we're going to see, more countries adopt this as legal tender in the future. I think that's not even a real bold prediction. And, the medium of exchange type side of Bitcoin is really going to utilize Lightning Network.
Yeah, it's pretty crazy to think about the Lightning Network without all the hype, right? For the most part, without tons of venture backing. And it's just been volunteers on the internet, kind of slowly but surely building a peer-to-peer network of, what at now is probably tens of thousands of people running these Lightning Network nodes all throughout through the world, and really building a actual decentralized system that has instantaneous settlement, nearly free from a fee perspective, and at the end of the day is superior to the legacy banking system. Right? If I want to send any amount of money, even if it is using my credit card at the coffee shop, etc., there is not cash finality. There is not instantaneous settlement. There is not nearly free, from a fee perspective. And so this is superior technology, and people around the world are adopting it. And I think you see it in some of these metrics that you're pointing out here. Let's talk about exchange flows. I know you've been looking a lot at that. You've got the 30-day kind of analysis of exchange flows. What is this telling us?
Yeah, so people try to get a little too fancy with exchange flows and use it as a top or a bottom indicator, and a lot of times it's not that simple. But I think we can identify a few secular trends here. One is that exchange flows are basically persistently negative for the most part. So coins are coming off exchanges, except for a few just type of big events we saw with the China exodus and kind of that liquidation event that happened, that mass liquidation event in the May of 2021, saw a lot of coins flow on exchanges. We saw following the Powell kind of pivot and inflation's not transitory in November, we saw some coins come onto exchange, but really the trend since the start of 2020 has been coins are flowing out of exchanges by the hundreds of thousands and just huge numbers. And so I think that trend is set to continue. And there will be, bumps in the road. And, there will be coins coming on exchanges at certain times, maybe the next time all-time high breaks. But the reality is people are increasingly coming to realize that Bitcoin and the native kind of properties of this asset that allow you to self-custody it are really important. Talking about Trudeau and Canada earlier, I caught a little bit of you guys before I came on. This whole thing with COVID, a lot of people are realizing it's not about health, and increasingly it's just about control. And so, money that can't be seized, money that's not a database entry in someone else's database, where if your political views don't align with theirs, well, your money might not be yours. So Bitcoin in that sense is more important than ever, and increasingly people are coming to realize that. So self-custody your coins, not your keys, not your coins. It's the story of Bitcoin.
Yeah, and it's only going to get louder and more prominent, I think. We've got the illiquid supply shock ratio here. What is this telling us?
Yeah, so shout out Will Clemente, came up with this one in 2021. And on chain, what you can really see is it quantifies the supply side of things. And really this primes or sets the stage for the demand side. So price runs when the marginal seller is exhausted. And what we see here is that just the marginal seller, or really just kind of this cohort of stackers, is taking over. And so just continuing to eat away at that free flow to supply, diminishing that available, Bitcoin to be sold on the market every single day. And so a liquid supply, this supply shock ratio, quantifying the illiquid supply relative to the liquid and highly liquid supply. Don't have to get too much into the weeds with the definitions, but basically it's just showing how much Bitcoin is being held by strong hands relative to that liquid supply. And so it's as attractive as it's been since the start of 2020, surpassing its 2021 highs. And so really what we're waiting for is this big demand shift. And I think we're starting to see it, not even from the inflation hedge narrative, this digital gold narrative, the central bank dilution narrative that we saw in 2020 and 21, but now we're seeing more so the censorship resistance kind of effect play or start to play out. And so really interesting time in Bitcoin, but the demand side, really or the supply side, what this is showing is that we're primed for a big move when that kind of demand shifts and comes in a big way.
Yeah, it's pretty incredible to watch this. Speaking of kind of this illiquid supply shock, one of the big things that we've heard everyone from Stanley Druckenmiller, Paul Tudor Jones talk about is this idea that Bitcoiners don't sell, right, for the most part. And the majority of them continue to hold for long periods of time. For those that don't know the story, I believe it was Paul Tudor Jones called Stanley Druckenmiller back in 2018, kind of beginning of 2019. He said, hey, do you want to hear a crazy stat? It was like 87% or some crazy high number of Bitcoiners who held Bitcoin when it was at 20,000 haven't sold, even though it dropped all the way down to around $3,000. And of course, they then said, well, that's pretty interesting, and ended up going ahead and getting themselves and many others to actually start to allocate to the asset class. You've got this chart here that shows that 60% of circulating supply has been dormant for 1+ year. How do you evaluate whether that's a good number, a bad number? Is it going higher? Is it going lower? How do you evaluate this?
Yeah, so I mean, there's not too much directional analysis that you can apply here. I think really it's just the story of it's more so just kind of quantifying what the people like Stan Druckenmiller and Paul Tudor Jones, when they decide to allocate a big chunk to this asset class, what they're seeing. And it's that, there's this cohort of people around the world of investors, maybe not even investors, maybe just savers that come to realize the properties of Bitcoin and say, I want to hold as much of this as I can. And so you're seeing recently that the supply dormant for 1 year is hockey sticking up and to the right. And so you can kind of think of that as being bullish in itself. That free flow to supply available is becoming less and less. But really, it's just showing that, up, down, sideways, there's people that understand that Bitcoin's the best money ever. And they're getting their fair share. And so, proof of work, you gotta put in some sort of capital, or you gotta, energy expenditure to acquire your fair share of this 21 million. So I think that's just a story. And this, 1 year dormant supply is a pretty interesting metric to look at over time.
Yeah. And when you look at that number, how much of that is driven by potentially lost coins or other, types of assets that or other holders that might not just be, strong holders that are never going to sell, but could be destroyed, lost, or anything like that?
Yeah, I think I've seen some pretty good estimates about, 2 to 3 million coins lost. I mean, I would certainly say Satoshi's million-ish stack is gone forever, whether purposefully or not. And so probably the real total available supply is somewhere around 18 million. 19 million coins are in circulation right now. And so, total supply available, I guess you could think of as like 15 million or so. But really, if you're looking at a lot of these HODL metrics, liquid supply type stuff, I would say only probably about a few million coins are, I guess, up for sale, if you want to call them. And really, price set at the margin, it's only a few 100,000 coins that are deciding this daily price. The rest is just being hodled by people that have no interest in exchanging back for fiat currency because they understand the end game.
Yeah. You've got this statistic here that says $1.4 trillion in immutable value transfer so far in 2022. That is a massive number and would put us on pace to destroy MasterCard and a number of other payment systems from just a value transfer standpoint. What's your analysis on this?
Yeah. So, I really could have just said, 1.426 trillion in change adjusted volume. But, if we're just thinking about recent events, thinking about what's happening in Canada, really, freedom money rings. And so immutable value transfer, like the value prop there, a lot of people in Western countries for the longest time said, what's the point when I can just transfer money on, ACH or Stripe or, Venmo? What's the point of Bitcoin? It's slow and efficient and all these other things. And then the reality is they say a wrong thing or attend a wrong protest and all of a sudden your money that you thought you had isn't your money. And so it's kind of somewhat dystopian, but the reality is that Bitcoin and its value prop has never been clearer for a lot of people. And so the reality is that, this monetary network and its properties aren't duplicable anywhere else in the world. This proof of work, the kind of settlement assurances that come with this protocol don't exist in other cryptocurrencies, and they don't exist in the legacy system. And so, this increasing trend towards overreach by governments and really, tyrants is not something that we want to see, but it's just the reality of how the world works and how it's, where we're going. And so, central bank digital currencies, a lot of this stuff, it's really somewhat of a, less freedom for all of us. And so to have Bitcoin here, to have this freedom money is something that, can't be understated. And that's why we keep emphasizing it over and over.
Got it. And then when you start to actually look at this last chart, the CPI year over year versus the Fed funds effective rate, obviously we've got tons of talk of inflation, of Fed policy decisions. 7.5% is a friggin' wild number. What's the read?
All right, so I'm going to read an excerpt from an IMF paper in 2011. And so just so people get some context to what we're dealing with here. So this was published in 2011 by the IMF. Says a subtle type of debt restructuring takes the form of financial repression. Financial repression includes direct lending to governments by captive domestic audiences, such as pension funds, explicit or implicit cap on interest rates, regulation of cross-border capital movements, and a generally tighter connection between government and banks. In a heavily regulated financial markets of the Bretton Woods system, several restrictions facilitated a sharp and rapid reduction in public debt to GDP ratios from 1940s to 1970s. Low nominal interest rates help reduce debt servicing costs, while a high incidence of negative real interest rates liquidate or erode the value of government debt. So what's happening? High inflation, low interest rates, domestic captive pension funds, and all these other sorts of capital are sitting in bonds, tens of trillions of dollars worth. What's happening? The real value of that capital is eroding in real time. So what we can take from this? Well, it's not so much a coincidence. It's more so that they're following a playbook. And if you're sitting in bonds, if you're sitting in debt securities, you're guaranteed to lose. So thankfully, we have an escape valve. Christine Lagarde, the chair of the ECB, said, if there's an escape valve, they'll use it. And the reality is that Bitcoin increasingly is becoming this escape valve for people. And not many people realize it. And a lot of people deny this fact that it's some sort of inflation hedge. But I wouldn't think of it as a inflation hedge on the CPI reading on a Wednesday or Thursday morning. That's kind of missing the forest for the trees. The reality is that digital gold, this absolutely scarce monetary asset that can't be censored, that can't be taken away from you, is this hedge against government tyranny, but also financial repression, which is the only way out of this unprecedented debt spiral that everywhere in the world seems to find themselves in. So it's more of a playbook than anything else, and I think you'd be wise to have some Bitcoin in your portfolio.
What's your read on the Canadian government, Bitcoin, freezing assets, the whole 9 yards?
Yeah, I mean, a lot of things to say. And I think, I've definitely made my opinion kind of loud and clear on Twitter. And I've had a lot of people, give me their, or I guess like frown upon my take that it's not about health. And I think it's becoming increasingly obvious that it's not about health. And it never really was. And so you're seeing, places like Canada and Australia and New Zealand, clamp down super hard on their citizens. And it's scary. It's definitely scary. I mean, I live, an hour from the Canadian border and probably won't go for a long time. So, Bitcoin is hope for these people, and, freedom money rings. I guess that's all I have to say in regards to that. But I think Trudeau and a lot of those government cronies are on the wrong side of history.
Joe, John, what questions you guys got?
Dylan, what's up, man? I like the mustache. Keep that going. Don't let him come after you. All right. My question would just be around the supply side and the buyers, right? So I think we've seen, and we've talked about this multiple times, of how retail continues to buy and just dollar cost average into this asset time over time again. But from the institutional side, like, what are you looking for there? And like, I guess from like a bull case scenario, if Bitcoin's going to go where we all think it's eventually going to go, like, how much of that is institutional based versus just the retailers continuing to buy into this asset?
Yeah. So, I mean, retail was definitely, they were like here to Bitcoin almost a decade before a lot of this like institutional capital. And that ever growing base of retail buyers is still going strong. But I think the institutional capital that's, moving funds off of like, say, the real yields and looking like, or say like pensions, endowments, all these other sort of funds, they're trading off of what's happening in legacy markets. And somewhat of a risk-off sentiment and price action in equity markets and credit markets, like we've covered in previous episodes, that definitely has an effect on their allocation and where they're moving capital. So that's kind of why we're seeing, I think, some sort of consolidation for the time being. You're seeing certainly some institutions, or maybe the ones that are a little more prudent, are saying, hey, we need to up our Bitcoin allocation in times of uncertainty, because not only is there inflation risk, but there's credit risk everywhere in the fiat system. But for the most part, I think we've seen somewhat of a halted kind of allocation from a lot of these big money funds until more like central banks kind of go off their hawkish stance a little bit. So even though inflation's 7% and the Fed funds is still 0 and the 10-year treasury is still at 2%, yields are laughably still very negative in real terms. But I think there'll be a pivot. They can't taper a Ponzi essentially, and so that's when a lot of this institutional capital comes back in a big way.
Gotcha.
Dylan, Russia, excuse me. Russia has obviously been in the news a lot lately, but recently they came out and were talking about lower taxes for people using electricity for crypto mining. What is your sentiment about all of that? And kind of, they now, I believe in August of last year, had around 11% of the Bitcoin mining in the world. What is your read around what's going on over there? Not trying to get political.
Yeah, I'm by no means a geopolitical analyst. I would just say that Russia, very natural resource rich. They export a lot of energy, obviously, and they've increasingly tried to basically get off the dollar system, get off that kind of SWIFT Fedwire system, de-dollarize their reserves. They're holding a lot less treasuries and a lot more gold, and so I think Bitcoin's a natural fit. Whether Putin straight up adopts it as as legal tender or currency, or they buy Bitcoin for reserves, that's another story. But I think it naturally makes sense. I think it would be a blunder of a move if they did something similar to what China did in terms of just kicking all their miners out. It makes almost no sense. And so I think the game theory says they embrace it, and whether they explicitly embrace it and come out as proponents and supporters is another story. But it's a quite natural fit given the the natural resources in Russia, and also just like the geopolitical environment and the history of U.S. sanctions and all of the like. So I think it's a natural fit, and we'll see where it goes. But the game theory says full go for Putin and Russia with Bitcoin.
Well said.
Dylan, last question we have for you. You don't know this because it happened while we've been talking, but ConocoPhillips, which is a $100 billion oil producer, they've publicly just announced and admitted that they are actually mining Bitcoin in the, I think it's pronounced Bacon or Bakken kind of formation, which is in kind of central part of the United States. So we've got one of the largest oil producers in the world that now is saying, yes, we are mining Bitcoin within the borders of the United States. What's your general take on these energy companies doing this and kind of now talking about it, it looks like?
Gradually, then suddenly. Yeah, I mean, it's all coming. They're all going to come. I mean, right now, the production cost of Bitcoin, I mean, it varies based on, your cost of power and your rig cost. But, a lot of these publicly traded miners are producing Bitcoin for $10,000 with a market price of 44,000. So, and a lot of say like Great American Mining and a couple other these companies are just taking like waste natural gas in the Bakken, where these guys, I guess, just said they're mining Bitcoin, and they have almost no marginal cost to this. It's waste energy, and they're mining Bitcoin with it. And so, every oil and gas company is gonna enter the space in a big way. And so I think we're still at the phase where it's a lot of the kind of early adopters. But the financial incentives alone say they're all going to come. So gradually, then suddenly, and it's nice to see another one of those dominoes fall.
I completely agree with that. Last question. Sentiment check from you. Obviously, with Bitcoin kind of going a little sideways here, people seem to be a little bit quieter on the internet. What's your general take as to where we are and kind of what to expect over the next couple of weeks?
Yeah, I mean, I think equities are still a big driver, risk on, risk off. What's happening, whether there's a deleveraging in the legacy system or not. I'm watching credit markets quite closely. They still don't look too great. We covered that on the last show. So I think that's kind of interim, short-term risks. But I mean, I came out and I said, I think it was about 2 weeks ago, glad I increased my Bitcoin allocation to 105%. So, I mean, I'm long and strong, no wavering beliefs here. Nothing's changed in that sense.
I love it. Joe, John, you guys got anything else?
No, man. Dylan, thanks for coming on, man.
Thanks, Dylan.
Appreciate you guys.
Dylan, you continue to kill it, my friend. Where are we at with the little Twitter check? Woo! 122.
How's the newsletter going, Dylan?
It's going great. Yeah, we're pumping out daily content. Released our monthly report last week. Got a lot of good feedback there. It was in a PDF format and looked pretty clean. So yeah, it's going great. Like to put out, good research, almost daily. It's hard to pump it out daily, but we try to make it work.
Nice.
Let's do it, my friend. All right. We appreciate you. Keep up the great work. See you next Tuesday.
Peace.
Later, buddy.